Well, hello there, and many thanks for joining us on this episode of Africa Business Weekly as we wrap up the month of June with the biggest conversations in the world of business across sub-Saharan Africa. I'm Ake Obake. Our spotlight this week beams focus on talks with Edward Gemayel, International Monetary Fund's mission chief for Senegal, as the country secures a credit facility under resilience and sustainability from the Bretton Woods institution. And away from West Africa to the east of the continent, Rwanda's banking sector is betting on blended financing to boost credit uptake in the country with a special focus on green funds. But let's get right into the conversations for the day with my colleague in Southern Africa. Hello, Palesa.
Africa's most populous country, Nigeria, may no longer be on red alert for a possible debt default after a statistics bureau announced higher government revenues than before due to computing items that were previously excluded. For more on why Nigeria is a favorable emerging market, CNBC caught up with Charlie Robertson, the head of macro strategy at FIM Partners UK. Let's watch.
What they've announced is that revenues, which the IMF was saying were about 7% of GDP in 2021. Now, in the States, it would be more like 40%. In Western Europe, it's as much as 50%. But in Nigeria, it was counted as just 7% in 2021. They're now saying is over 10%. It's a 49% rise in the revenues in terms of the share of the economy that the government's managing to collect. Now, that's a huge increase. 7% was like as low as Somalia. So it was really telling us, or close to, it was telling us that Nigeria just was collecting no taxes at all. And that made the debt numbers look awful. When I compared debt to revenues, it looked awful. The figures look considerably better now. But your first question, what have they done? We don't know. There's like a one-line explanation in the announcement that came from the Statistics Office last week.
Sure, and that explanation, I mean, if I just summarize it in terms of my understanding, is the fact that they are now computing things that they didn't previously, and not to discount the Statistics Office, because I mean, any Statistics Office, I think, in any country in the world is regarded with a certain level of credibility, just given the stature of the office and the data that they are privy to and all of that. But I'd like to know then how it has landed and how it is being perceived by the investment community, by yourself rather. I mean, do you believe them?
The thing that you notice when you go to see the Statistics Office in Abuja is that, you know, many of the visits I've had there's no power. So the electricity gets cut off, and there was a huge argument a few years ago about who was going to pay the power bill. Eventually, I think the central bank found the cash for the Statistics Office to do it. So I think it's been a real struggle for them to do their job well. Do I think it's credible that a load of institutions they've now gone out and measured and said, well, hold on, that's actually a government agency and they are collecting revenues and we ought to include it. Is it credible that they're only doing that now? Yes, it is. And I think markets might say it's also really helpful timing. You know, when people have been worried about potential default, it's very helpful for a government to suddenly say, oh, we're collecting a lot more revenues than you thought, or that we were even publishing. But at the end of the day, I think the IMF and the credit rating agencies will take those new numbers into account. They have to. And they will have to be a little bit more optimistic, and the markets too, on Nigeria's ability to manage the debt load it's taken on in the last 10 years.
Okay. What was going to be my next question in terms of how you think the IMF would likely respond to this new development regarding statistics, as well as the ratings agencies that have Nigeria on a junk status or below investment grade, as quite a number of countries on the continent, because how they view this will be very important as to what they do in terms of their growth metrics and their forecasts for the country, and also their rating of the country in terms of investability. You say that they'll have to be more optimistic. What does that mean? Does optimistic mean that they might actually have to erase some of their initial forecasts and revise them to account for the new numbers?
Well, in terms of what the IMF's thinking, I'm literally on a call with them in about 3 hours to ask them about this. So
Sure.
I will know more from the IMF's perspective later this afternoon. From the credit rating agency's perspective, what's been worrying me is that the countries that have been defaulting have seen interest payments as a percentage of revenues.
Environmental, social and governance investing continues to be paramount to the future of businesses in South Africa and the world. To unpack some of the progress made, CNBC Africa caught up with Manga Sebastian, portfolio manager at Sanlam Investments. Let's listen in.
At ESG in African context and South Africa, we have to recognize that the context of South Africa is different from the context globally. And one of the things that we were trying to see is what is that context? Where should we be focusing as South Africa when you look at the E, S, and G? And what we saw is that we looked at countries within Africa who have experienced similar histories as ours and countries that are different. So we did a comparative analysis of Rwanda, Botswana, and Mauritius. And what we wanted to establish is how have these countries managed to achieve GDP growth rates above the world average of 1.2. So we have Rwanda, for example, that has a 20-year growth of about 4.1. And then you have Botswana at the tail end of 1.2. But South Africa is below the average at 0.9. So what drove this was to say, well, what drives these GDP growth rates? What are the pillars behind it? And what we looked at was the UN Conference Trade and Development Productive Capacity Index. Mouthful, apologies. So let's shorten it for the UN PCI index. And this UN PCI index showed that when we look at these countries, Rwanda, Mauritius, and Botswana, they made significant investments in the human capital pillar, right? And so when we look at what other pillars there are, you can think of the pillars in two groups. The natural resource-driven pillars, which is your transport, your energy, and your natural resources. Then the human-centric pillars, which is your human capital, that's your education, your healthcare, your housing. Then you've got your institutions, our governments. We've got ICTS, that technical knowledge. Then we've also got our private institutions. And lastly, we then have our ability to make structural changes. Those 5 groups make up the majority of this index. And it was interesting to see how did these movements happen across these countries.
Yeah. But no, it's not rocket science, right? The fact that your healthcare, the better it is, the healthier your citizens, the contribution to GDP. Education, contribution to GDP. So are we lagging behind as South Africa because we have not enabled better healthcare, we have not enabled better education? Say what you wish. Is this the reason why we've lagged behind?
I think the reason we've lagged behind is more of the quality. When we look at the spend that South Africa is making compared to these other 4 countries, South Africa is dedicating 15% of their national budget as of 2023 to both these healthcare and education. But we have these other smaller countries dedicating a fraction of it. When we look at Rwanda, that's 7.4, yet their ability to read for understanding is quite strong. And we've seen with the latest results that have come out from the Pearls study that 8 out of 10 grade 4 students are not being able to read for understanding. So it's not about the spend, it's about the quality, and the quality targeted at these major human-centric sectors.
So we're going for quantity versus quality.
That's correct.
Now there's an additional risk that whilst we have this huge population of young people that are going to enter, we probably will have the least able to have meaningful work, exportable for work, etc. So what is the other risk? How do we articulate the risk long term? Because we see the problem now, but how is it going to look like in 10 years, in 20 years time for these youth that come into the market with low education, low quality education?
Okay, and I think that's an interesting question to bring up when we start looking at the changes and innovations that are coming into our world. AI and ChatGPT is the trendy word right now. And when you look at that requires our youth to have an understanding of how technology works, how to use this technology to make productive improvements in their space. And that's important. And to get our youth to that space is to get them to a point where they can start understanding the languages used to get these systems to work, the languages needed to make these big jumps in growth, in change, and contribution to innovation.
That's it from the Southern Africa team. It's back to you.
Well, thanks for the update there, Palesa. Up next, we now cross over to East Africa for more content with Tessie Kevin. Hello, Tessie.
Thank you, Akin. According to data from the Rwanda Development Board, the European Union is the biggest source of foreign direct investment to Rwanda, with investments worth $210 million registered in 2022. At the EU-Rwanda Business Forum, private sector players gathered to explore investment and trade opportunities.
That we are doing for the first time with the EU, and that's hosting the EU-Rwanda Business Forum. And the goal is to work together with the EU Commission to identify investors that can come from the EU to Rwanda, or partners that Rwandans can have from the EU to do business in our country. And so what we expect to come out of this is, after these engagements, to have more investments coming from the EU. And EU is already an important part of our investment story, because they bring the most number of investments as a group, as the EU, and in all the key sectors. So we expect that growth is going to happen because we've combined our efforts as the government of Rwanda and the EU Commission with the DG in charge of international partnerships here. But in terms of what to expect, we finished the morning part, which was really setting the tone. We have, at the highest level, the Prime Minister of Rwanda really setting the tone of what the partnership between the EU and Rwanda should look like, the expectations, but also building on what has been done already. We also had the DG in charge of international partnerships from the EU, setting the tone from the EU side, identifying the areas of interest, the partnerships that they're looking at building with Rwanda. And these combined, I think, have set a very good start or tone for the rest of the conference. And what we expect this afternoon and tomorrow morning is now to go deeper into specific areas of interest. And we identified 4 sectors: agriculture, agro-processing, mining, healthcare and pharmaceutical, as well as the green economy. And so the next sessions, both today and tomorrow, is going to be discussing deeply aspects of each of those. And we invited the sector leads. For example, e-mobility, we have the Minister of Infrastructure, agriculture, we have the Minister of Agriculture from Rwanda, mining, we have the team from Rwanda Mining Board. But also for each of those sectors, we brought in EU investors that are already in the process of investing in Rwanda. For example, in mining, Luna Smelter will be sharing their story. In packaging, for example, we'll have Skoll that is going to be part of that discussion as well, and many others. So the idea is, let's show what has been done. Let's show what's possible. Let's encourage more to be done, but let's show how, where it's going to be done, and in which sectors. And that's what we expect by the end of tomorrow when the session comes to an end.
You've said Rwanda and EU have a very good partnership, even before today's event. What are some of the key areas? What does EU bring to Rwanda?
My favorite story today to tell is the vaccine story. The vaccine was a deliberate structure that was built at the highest level by the EU and Rwanda, together with other African countries and institutions as well. But on our part, President Kagame himself having a conversation with the President of the EU Commission, and together seeing an opportunity for vaccines, especially because of the pandemic that happened. And then the EU introducing Rwanda to BioNTech, and then discussions started there, bringing all the institutions such as the IFC on board, the Africa CDC on board. We have AFDB and other institutions that are going to be part of this, but really the lead being a conversation and a deliberate approach to making this happen. And you have EIB, the European Investment Bank, being part of that as well. And also the EU providing support in the regulatory aspect, because you cannot make vaccines or pharmaceuticals without being clear about how the regulatory framework that ensures quality is going to be done. So they supported in that area as well. I think that if we go with this mindset of let's identify the private sector, let's identify the need and the opportunity, let's identify other partners that need to make it happen, let's sit down together and make it happen. I think that if we look for projects, big projects in agriculture, big projects in mining, in health and pharmaceuticals, big projects also in the green economy, together we can really find winning examples. And again, that is just one example of how we work together recently.
Rwanda's banking sector is betting big on blended financing to boost credit uptake in the country, with a special focus on green funds. CNBC Africa had an exclusive interview with the Bank of Kigali CEO Diane Karusisi for more.
I think Africa in general and our region in particular has shown resilience to the devastating impact of COVID-19, and we've seen continuous growth and year on year. And the banks are there to play a big role in supporting all the sectors of the economy to recover. And there's still a lot of room to cover when you look at sectors like agriculture that are still underfunded by financial institutions. And with all the work that is being done by the government, by many stakeholders, DFIs, I think we've seen a lot of the building of an ecosystem with a lot of risk sharing and guarantees, interest rate subsidies that is really helping banks to deploy more financing to the sector. And this has a big impact in terms of supporting growth and also reducing poverty.
I'm quite interested about the agricultural sector because listening to the central bank governor of Rwanda, he was looking at some of the key issues that continue to plague the sector, including funding and, of course, the climatic conditions. Improved rainfall has, of course, painted a better forecast for Rwanda. And from where you sit, how big a gap is it there in the agricultural space from a funding perspective?
It's very simple. When you look at all bank assets in the country, only 7% is deployed into agriculture. Yet it's close to 30% of our GDP. Close to 70% of our people rely on agriculture for their livelihood, so there's a big gap there. We see now more funding going into more mature value chains like tea, coffee, and I think the government has been working collaboratively with a number of stakeholders to mature more value chains in maize, rice, dairy also is becoming more and more important with the setup of a milk powder plant and basically an ecosystem. And I think Rwanda is moving slowly but surely from a subsistence farming country to a more commercial farming country. And we'll see as these value chains mature, as our farmers become more of entrepreneurs, I think we'll see more and more funding going into agriculture.
And of course, agriculture remains as a cornerstone for many African economies, and it is also an area that has been touted as quite risky, considering the profile of customers coming from that niche market. And from a risk perspective, how are banks sort of insulating themselves from this potential risk and at the same time not ignoring this market?
Very good question. I think for a long time we've been, I talk about banks, complaining about lack of information, financial information in agriculture. So this has been built over time now. For some value chains you can have data dating back 5, 6, 7 years, which is really helping banks to assess some of these value chains. So now, and this is also has helped us to build products like agriculture insurance. All these risk sharing and these guarantees have been built because there is data. But now there's a new risk that is emerging, which is climate risk, that has obviously been there forever. But now I think people are reckoning that climate risk is becoming a bigger risk for the agriculture sector. And all banks are moving from, requesting financial information and getting the right kind of products to support them manage these risks like agriculture insurance, to now shifting to climate risk. And everyone is asking, what I mean, we need now to be able to assess climate risk.
That's all from me. It's back to you, Akin.
Well, many thanks, Tessie. We now bring our regional focus back to West Africa. The Executive Board of the International Monetary Fund has approved a 36-month extended credit facility and extended fund facility of about $1.5 billion with Senegal and an additional $324 million under the Resilience and Sustainability Facility. Now, Senegal will immediately get about $216 million under the program. My colleague Wale Famrewa had a chat with Edward Gemayel, IMF's mission chief for Senegal, on the significance of the facility. Take a listen.
Over the past 3 years, Senegal has faced consecutive external and domestic shocks that have hindered the post-pandemic recovery, strained its public finances, and increased external financing needs as well as exacerbated its debt vulnerabilities. And so in that context, the new facility that you mentioned, the ECF-EFF arrangement, will seek to have the Senegalese authorities address these challenges. Namely, the facility, as you said, is 1.5 billion and will meet first the pressing needs related to the pandemic-induced scars, the higher cost of living amid the Russia's war in Ukraine, and also regional insecurity, particularly at this current juncture when market borrowing is extremely high and difficult, be it on the regional market or even on the international market. Most importantly, the new program will aim to support Senegal in its pursuit of implementing a reform agenda that will address the macroeconomic imbalances and promote a sustained and inclusive economic growth over a medium term. And to this end, the new program will focus on three main pillars. First, reducing debt vulnerabilities through a credible fiscal consolidation process. Second, strengthen the economic governance in the country and the fight against corruption. And lastly, fostering a more inclusive and private sector-led growth.
And in terms of, if you like, the demands that these facilities are making on the authorities in Senegal, can you just clarify what we can anticipate there? Very often, many would say that going to the IMF comes with a lot of reform that many countries and authorities perhaps would rather not do. What, in your view, will be the significant shift in terms of how the macroeconomy is organized and the books, if you like, the balance sheet of the government is organized as well?
Yeah, I think the way to look at it is to see the evolution of debt in Senegal before the pandemic versus today. Before the pandemic, end of 2019, the total public debt was about 64%. Back then, we had projected debt to be, by end of 2022, around the same level, about 65%. The fact of the matter is that total debt today, at end of 2022, instead of being at 65% of GDP, it is at about 76.5% of GDP. And so to address the growing debt and ensuring that debt remains sustainable, the authorities, they have agreed, as I said earlier, on a fiscal consolidation strategy, which aims to gradually return the deficit to around 3% of GDP. Just to mention here that over the past 3 years, deficit has exceeded 6% of GDP, which has contributed significantly to the debt. And so the fiscal consolidation strategy, or what would be expected, as you asked, from the government, would be designed around a growth-friendly path. Namely, on the revenue side, the tax exemptions will need to be addressed. They exceed 6% of GDP, and we think that there is room to streamline these tax exemptions. And on the revenue side, the subsidy bill, the energy subsidy bill, has soared over the past 2 years. It used to be at less than 1% of GDP 2 years ago. Last year, in 2022, it was above 4% of GDP. And so the phasing out of these subsidies by 2025, there's a path over the next 3 years, will be critical. But most importantly, that should be also accompanied by assistance to the most vulnerable, and they have started to do so.
Next up, the International Air Transport Association says blocked funds belonging to foreign airlines trapped in Nigeria had hit about $812.2 million, warning that the rapidly rising levels of blocked funds are a threat to airline connectivity. Meanwhile, foreign airlines have shut down their lower inventories due to the inability to repatriate revenue from ticket sales. Here are some insights into the interview with Kamil Alawade, the Regional Vice President for Africa and the Middle East at IATA, on efforts underway to address these challenges.
So just for an update, as of the end of May, the block funds just in Nigeria hit 850 million. That's the single highest block funds on earth. The implications, as you asked, if you want the aviation industry to continue operating into Nigeria, you need to settle the bills. I've listened to some of the and read some articles, and I've noticed that it seems to be a misconception that this money, this $850 million, is as if it's going to be a gift from the government. It's not. It is for services rendered. So what's happening now is that airlines, as you correctly said, airlines are blocking the lower fares and raising the prices because they need to make their money back. It costs a lot of money to operate an aircraft from one country to another. What's amazing to me is Nigeria is very willing to take all the charges and the taxes and the levies and the fees all in dollars, but they don't want to give the airlines their money back in dollars. This is going to cause an eventual reciprocity where countries will start treating Nigerian airlines the same, and aviation in and out of Nigeria will completely come to a grinding halt.
How close would you say we are to this? And of course, this is a worst case scenario, but if this isn't addressed in 6 months, could this happen?
No, I think if it doesn't get addressed earlier than this is going to happen. When you look at just one airline, it's owed $400 million. Just one single airline. That's a lot of money. That's what startup airlines, I mean, this is double or triple what startup airlines need to start up. Okay, so $400 million being blocked just for a single airline. It comes to a stage where it is no longer feasible. They don't have the liquid cash to actually fund their operations into Nigeria. So I think we are at the tip of this snowball is going to start rolling, and it's going to result in the collapse of the aviation industry in Nigeria.
But no doubt there should be some engagement happening. What are you hearing from the authorities here?
Well, it's unfortunate, or maybe fortunate, depends which way you look at it, that I've been trying to engage since the elections. Okay, so prior to the elections, pretty much everything came to a grinding halt. There were more priorities. So just after the elections, I'm sure you know, the government actually officially took over on the 29th of May. So we've been trying to engage with the new governor, which is not as simple as it sounds, the central bank governor, that is. And so we're hoping within the next 2 weeks, we will be in there and engaging again. It is a matter of priority. It's not like there isn't any dollars in Nigeria. Of course there is. And one of the reasons there is dollars in Nigeria is because of aviation. So, you don't kill the goose that lays the golden eggs.
On that note, it's a wrap on this week's show and the last for this month. Thanks, Palesa and Tessie. For the regional updates, join us same time next week for more interesting conversations as we cross into the second half of the year. I'm Akiobake. Do enjoy your weekend.